You've probably got a bit of a shock there, just hearing David for the first time, as I always start. It's lovely to have you with us this afternoon for today's session. So wherever you are calling in from, whatever part of the world, as I said, I know we get people from all over the place. It's great to have you with us. And if you were with us this morning, welcome back. Before we start, as usual, can I just draw your attention to the disclaimer that you can see on the screen. As you know, trading can be a very risky business. Please, please don't ever think of using money that you cannot afford to lose, or it would pain you, not only from a financial perspective, but also in an emotional way. Please, please don't use money that, as I said, you cannot afford to lose. Right, okay. Where am I? Let's have a look what I've got behind there. Oh yeah, here we are. I've actually got the dollar index up, only because obviously today we have the midterm elections going on in the States, and it's a very high stakes, not least because if the Republicans do lose control of, well, certainly the Congress, if perhaps even the Senate, who knows, but they may retain, you never know. 2016 was a shock to the world when Donald actually won. It throws into doubt all sorts of things, forgetting the personal stuff with Donald and is he going to be impeached and the Mueller investigation. You've got the trade tariff things, and as I said this morning, it is one of the most important and key midterm elections, I think, for a very, very long time. The markets have actually been relatively, I wouldn't say relatively positive about it. I think everyone is just really waiting to see what the outcome is going to be. The FOMC is on Thursday. Today is also the last day, I believe, for a whole load of earnings as well. It's the sort of fag end of the earnings season. David's been looking. Have you been looking at the YM, darling?
I've got them all up.
Yeah, David's got all the indices up. We've had the usual volatility, and I've actually got GE up because I know a few weeks ago we looked at GE, and there's a really fantastic VPA lesson that we highlighted, I think at the time, and again where we have the waterfall in the stock, and in fact it's got to single figures. I think it touched a low of just over $9, and it's quite interesting because I put up investing.com just to see what, just to sort of catch up really. You know what it's like when you come to your screens. You have to have a feel for what is going on in the broader markets. Although I have to say, things are kind of, they move so fast these days. I don't know how these guys at sites like Investing can keep up, because they'll write Wall Street opens flat or up, down, and you're looking at your chart. So you do have to be aware that everything, it just moves so quickly these days. And what did I see? I saw this really interesting article about GE and whether it really has hit a bottom. David and I, when we talked about it, said no, there was still some more downside. I think we were talking about it when it was about $10, darling. Yeah, 10, something like $11, something like that. And then it had another push, a shove lower, and we'll have, in fact, let me show you the chart because it's actually a really nice VPA lesson. And what we also said was, because the question was about is the accumulation over for GE? And to be honest, it hasn't even started yet, because the waterfall hasn't finished. And this is the candle. This is the candle that is just a brilliant candle. And you can see this candle in all sorts of markets, all sorts of time frames. It's when you're in a downtrend, and
I think your cursor is out.
is it? Okay.
Do you want to use the crosshairs?
Let's have the crosshairs. I don't know what's the matter with my Ninja here. Let's have a look right now. That candle. Can you see the crosshairs?
Yeah.
Yeah. And this is the candle. If you think, markets always move so much faster on the way down than they go up, and it can be very frustrating when you see a beautiful move down and you think, oh, I've missed it now. I've just got to be patient, perhaps, and wait for some stopping volume to come in, and maybe I can get an opportunity to take the trade to the upside. But when you see this candle combination and this amount of volume, where basically you've had the break away from the volume point of control. And you can see here we had volume was kind of rising. And then obviously before this candle closed, there was an effort to rise, and rise quite substantially, but then it gets all knocked back all the way, so you end up with this big wick to the top and a ton of volume underneath it. That is a fantastic VPA signal, which you can consider as a potential entry point, and that is going to tell you this has got some more downside momentum. And in fact, we see here we've got a rising volume, candle spreads, not so much on that one, that's more of a sort of a doji. Then we have that one, rising volume, and we have this one, and this was yesterday. So we had some stopping volume coming in on Friday. Why? Because we've got the wick to the bottom. That's when it touched the low of 904, literally just about held over $9, and that's yesterday's little candle, where it is a down candle, but there's not a lot of volume underneath it, and today we have the effort to rise. Now you're not going to see a V-shaped recovery for GE. What we're going to see more likely is possibly a little bit of certainly sideways price action, but this is the candle and volume combination that you really always keep an eye on it. And yeah, okay. I was just going to highlight the books, but I'll do that in a minute. Is that okay? Yeah, fine.
Hello everyone, and very warm welcome again, and sorry to shock you with my voice. You're so used to Anna starting these webinars. Anyway, we're all sorted now. I just wanted to highlight that particular candle because the way that I visualize it and the way we've often described it, I think makes it perhaps even more, it gives you a visual picture of what is going on. And the analogy, if that's the right word, that we tend to use and think of these candles in this way is a water-filled balloon. If you've ever filled a balloon up with water, you'll know exactly what I mean. What happens is you start filling it up with water and it gets heavier and heavier, and the neck of the balloon gets more and more stretched, and the weight of the water is dragging it ever lower, and eventually, of course, it bursts. That is pretty much what that candle is like, and it's the reason it's so powerful. You'll see them in all time frames. You'll see them at congestion phases. In this case, it's a continuation of the waterfall trend, but you do see them in congestion phases where you've had a trend move lower. We then move into a congestion phase. The market tries to rally. You get a decent wick to the upper body, and then you get the body itself can be either positive or negative. It doesn't make a great deal of difference. But if it's like this, where you've got width to it as well, and you've got some really big volume underneath it, it is just like that. It's like a water-filled balloon that just cannot hold the pressure anymore, the weight of the water, and the whole thing just explodes. And that's what happens. And it's just a nice way of thinking about that sort of candle and what it means and what it implies. And if you look for them, you will find them. They are just so powerful. If you're not in there, time to get in. If you're in there already, you just keep on holding in there. I just wanted to give you that visual because it is, oh blimey, we've got a nice little purple arrow suddenly appeared. Where did that come from? There we go. So that just makes it clear. That's the candle to look for. And as I say, you'll see them in all time frames, all markets, and they're just very, very powerful, as long as they're associated with volume, obviously.
If I turn myself on, of course. What we talk about here in these sessions is our core methodology of volume price analysis. You can, and if it's your first time with us here, it's all explained in the books on Amazon. This is the book, but it's also accompanied now with a book of about 200 worked examples. So we just pick up one that we see in a chart at the moment, but if you really, really want to get to grips with volume price analysis and you want, as I said, more examples, because that's the one overriding question that I've been asked since the VPA book was launched back in 2014, was it 2013, 2014? Yeah, 13, 14. So that's what it is. And there's one for Forex, and this is for stocks, indices, and there are some commodities as well. And that's what we discuss in this session. In this session, we looked at stocks and commodities, how we apply volume price analysis, primarily with NinjaTrader. I do have my MT5 up. I had the Dixie up there, but it is primarily NinjaTrader. And what we also use in this session is we use the tools from the NinjaTrader package that we actually call the essentials. We're going to rename them because really they are they're much more for kind of day trading, because we're going to look at some non-time based charts. We've got a Renko chart, and we've got a tick chart as well. But that's what we that's where what we're going to talk about here. NinjaTrader tools we've developed, you can use them as not only for day trading but for investing as well. Things like the volume point of control, where you have volume, price and time. And we'll talk about the volume point of control at another session, because there we have elements of market profile, we look at fair value, and all the sort of elements that surround that particular approach as well. But we've incorporated it into the VPA methodology as well. And you can say, well, why has buyers stepped into the into GE? It's the perception of value. It's so beaten down. It's cheap relative to what it was back in, I don't know, what was the height that it achieved, the GE. A GE is just a fantastic stock to learn, if you like, and in fact this is the monthly chart you can see here. What have we got? This is last month. You can see a ton of volume under that candle there. That's where the damage was really done, when it was down at, where did it, about $25 there, you can see here. But the height was about $34, as it were. $35, that's the so if you like, someone looking for a stock, they would look at that and they would think, oh, it was $35, oh gosh, it's $9 now. Well, you take it from us, it can go to zero. What are the likelihood that it will go to zero? All I would say is anything is possible. And if you're here in the UK, perhaps you can remember a stock called Marconi. Anyway, I'm going to pass over to David. Is that all right, love? Yeah, that's fine. So, and if you've got any questions about anything we say here, do please just pop it into the chat box. We'll be happy to answer them on air, or I'll answer in the chat box. But I'm just going to move over.
Should be coming up on your screen now. I'm just looking over at Anna's shoulder. Yep, that's fine. I can see we've got the screen up there. That's great. I've basically got the, well, I've got a whole raft of stuff here, but I've got the ES up just for a change. Just move my chat box out of the way. There we go. So we're on the ES, which is the futures contract for the S&P 500. And basically, this is where we started our own trading life 20 odd years ago, trading the FTSE 100 futures through the Liffey exchange, which sadly is no longer there. But happy days, it was all good fun. So this is the ES. I've got the 3 minute at the top left. This is on the tick speedometers. This is basically delivering the optimal tick settings for the tick charts, which I've got over here on a separate tab. I need to just update those because this is from the pre-open. And this is the huge difference that you see in terms of tick activity, in terms of the tick chart between when you're running on the electronic on Globex, as opposed to when you're running with both the physical and the electronic exchanges open. You can see how much it's swinging about at the moment. So I'm just going to set that to 1597 just to update that. So that's I've got the tick chart here, and also got a Renko chart alongside. Down at the bottom left, I've got the 5 minute equivalent for the year. So this is just a regular time-based chart. And over on the right-hand side here, I've got the 15 minute time frame as well. So I've got an array of time frames, and I've toggled between the Renko up here and the tick chart as well. And using them in combination is just a great way to blend. As we said this morning in the Forex session, it's just a great way to blend time-based charts with non-time-based charts. Charts like the Renko up here, for example, it just smooths out the noise. I mean, right now, I'm gonna have to turn my monitor around because I've got the sun shining on it a bit. Right now, we had a really clean open. If I open up the 5-minute here, we had some volatility, but there wasn't a lot of whipsawing around. Really solid volume under these candles. There were no strong reactions. The volatility was taken out. We had another one, continued higher, very strong volume. Then we had a little bit of weakness appearing on this particular candle with a lot of volume, but it carried on up to the next level. Now we're trading around this congestion phase. The trend monitor is holding us in for the time being. We're at the VPOC, which is the yellow line, which is the volume point of control. So basically the market is in price agreement, if you will, between the lower level at 27.45 odd up to 51. So we're in a 5 or 6 point range here. It's still retaining that sort of bullishness for the time being, but you can see there, literally as I'm speaking, the trend monitors had a transitional change into darker blue purely because we were in a congestion phase. We don't know at this point whether we're going to see a complete reversal and down in from a primary trend. If we consider this to be the primary bullish trend on a 5-minute, we're into congestion, we could see a reversal back into a primary bearish trend. We're not sure at the moment, and to have to check and see what's happening on the other time frames, and also to look at the other charts as well, and just give us a feel for what we're seeing in terms of the Renko, for example. I'm just going to change this to a 1 minute. What the Renko optimizer does, and it does this on the MT5 as well, but on the Ninja Trader, it basically delivers the optimal setting. So it's telling me at the moment I need to open a 6 brick setting, which is 1.5 pips, 1.5 points rather, on the ES, and it just delivers it automatically. So whatever index you're trading or whatever market you're trading, you put the Renko optimizer on, and it automatically tells you what the correct setting is so that you are optimized with the market you're trading. And you can choose the various time frames, it doesn't matter. It will deliver those for you. If you prefer a 2-minute or 3-minute, you want to trade a little bit slower, then it'll deliver the optimal setting for that particular time frame. And of course it changes. It's like the tick chart settings. If I go back to the tick speed, the tick chart here, we're still at 1597, but the actual is 19 at 12 at the moment in terms of ticks on a 3-minute time frame. You can also see here that the tick activity is draining away. We had the surge in activity here, which is denoted in green on the tick speedometer. For the last 15, 20, 30 minutes or so, we've been trading in orange here, which is the norm, if you will. That's the average, the expected. But what's happening now is we're seeing a decline, a serious decline in tick activity. And if this market is going to continue higher, then we need to see volume coming into it. We need to see a break away from the short-term congestion that's building. And that, of course, is all reflected down here at the same time on the traditional time-based chart as well, on the 5-minute. But this tick activity is constantly changing. We're running in slow at the moment for the ES. Running at these sorts of speed, 2,000 ticks on 3-minute is pretty slow. Normally this would be up at 5, 6, 7,000 if the market's running fast. What that's telling you right now is that the activity in the market, the volume, if you will, represented by activity, is draining away. Market participants, they've had a strong open, relatively speaking, and given all the political events surrounding what is going on now, and earnings season and everything else, and trade wars and the rest of it, what we're starting to see now is a withdrawal from that positive sentiment for the time being. And that is reflected on the time-based charts as well. And when you go down to the 15-minute time horizon, here we have the volatility triggered, and it's another reason for using a multiple time frame approach, because what one chart will tell you may not be reflected in other time frames. So when you see it reflected in slower charts, for example, as here, you see the volatility, it just gives you another heads up as to what is going on in terms of the price action. And it's another reason for using multiple charts, because in addition to that, it also gives you a different perspective in terms of the candles and candle patterns. Now we're starting to see the congestion breakaway. What's going to be interesting to see is the volume pickup in volume. Are we going to see strong selling volume coming in? We've got decent volume under this particular candle. We've broken through the floor of support for the time being. Just see what goes on the 5-minute chart. Just pop that up full size. It'll be interesting to see what the volume is when that candle closes. I've got the volume on the close of the candle, not in real time, price per price, because I've got so much volume coming in and so many charts open. It does tend to overload the system a little bit because I've got so much data coming in. What you're also seeing here is a change in the trend monitor. You can see it down here on the 5-minute. We've got a transition through to darker blue. We've had the bullish momentum to the upside. We've got to the volume point of control. We've got a low volume node in this region. We've got some higher volume building in this region. But if we break through this floor at 2742, then we've got a low volume down here. And the market should go through there fairly swiftly if it's going to continue lower. Decent volume under that last candle. We've got some minor support here, potential support, this blue line, but it is pretty minor. This is the very, very strong level of what is now support. At this point, it was resistance, which was taken out, but now it's acting as support, potentially at 27.35.5. That is very, very solid, as denoted by the width of the dashed line, which is based on price. Accumulation distribution indicator works on price. It's looking at those levels which have been tested and retested or have held, and so build the levels of support and resistance. Let's just go to the Renko. You can see the same effect on the Renko, where we're now seeing a, just pop that up full size, make it a little bit easier to see. Just pull that over. This was the run up, the trend dots below. We're into the congestion phase, exactly the same as on the price action. We've got the pivots forming here. And we've got the trend monitor, which is now moving into a transitional phase. The trend dots have changed. We're into blue, we're into gray, down into red. And we are starting to see the same effect on the price chart. The nice thing with the Renko is it just smooths out that noise level. It just helps to give a different perspective on price action. And with regard to the tick charts, we've already seen that transition into the bearish red on the trend monitor. And what you'll see on the tick chart is you will see raw momentum revealed as the price action speeds up and slows down. In other words, activity, because the tick chart doesn't work on a time base, it is completely independent of time. So a tick chart, because each candle will form in 1597 ticks, in other words, when 1597 ticks have gone through that market, that is when the candle closes. The faster that happens, the quicker the candles form. The slower that happens, then the slower the candle forms. And that's what you get. You get a sense of momentum as the market's speeding up and slowing down. You never see that on a time-based chart. And it's another reason for using a blend of time and non-time based charts to get a different perspective on the price action to help you make those all-important trading decisions. Just see how that's going. I think pretty much the same is happening in the other markets. Just have a look at the YM. This is on the daily. There we go. That's on the daily. We had this very big candle here, this pretty much a long-legged doji, although not equal, but we had a long-legged doji the other day. Markets tried to rally. It's not looking terribly strong. Plus, we're running into, certainly as far as the YM is concerned, sorry, this is the ES on the daily, we're running into some pretty strong price-based congestion to the left. So it's no great surprise to see the market that is struggling at that particular level right now on the daily. Let's just go to, this is on the NQ. Let's pop that up full size. NQ, very similar. They're not always identical, but for the last, certainly for the last sort of couple of weeks or so, they have been following, really mirroring one another, the three sisters, quite closely. So what you tend to see on one is reflected in another. It's another great way to trade the indices. If you're trading the indices, you have to have all three up, because what you see in one will help you in making decisions on another. They won't be identical, but they will be fairly close. And what you'll see in terms of volume and price action on one is a real help when you're trading another. I can assure you it does work. It's very similar to what we used to do when we first started. We used to run the cash market with the futures, and you'd see moves in the futures market first before the cash. So you were always looking for those opportunities, and it's exactly the same here. It's just using a different perspective, a different relational aspect, if you will, where you're using the three indices together. If you're trading the YM, have the NQ and the ES up, or even the TF, just have those markets up and watch what is going on, because they will pretty much mirror one another. And the volume profiles will be slightly different perhaps, and you can just get a different perspective on what is going on. It's just so powerful. Let's just go back to where we were. There we go. We got, Tazana said, we've got piano keys at the moment. As I said this morning, you have to, sorry, I'm just going to switch off for a minute. Apologies, we have two dogs. I'm sure you know them. Those who come along regularly will know them, Bertie and Harry. They do tend to join in occasionally. Just going to drop that out of the way for a moment. I'm just going to head off to another chart I've got down here, which is, let's just stay with it for a moment. Let's see if it breaks out from this, breaks away from the volume point of control or not. One of the things I was saying this morning was about whether you're a reversal trader, whether you're a trend trader, what is it you want to be, what tactical approach, are you going to trade breakaways, reversals, jump on trends, what are you trying to do? And when the market's in a congestion phase, as it is here, and it's no great surprise, because we're trading around the volume point of control, that's what you expect to happen. The volume is building here, the market is in price agreement, there's no particular strong bearish or bullish sentiment right now. We just have to wait and be patient. We wait for the levels to build above and below, the floors and ceilings. Once those levels are established, then it's a question of jumping in and either taking the trade as the market breaks away, or alternatively waiting for the trend to develop. In other words, the direction to be established, and then you jump into that position as the market moves. The difference is, if you're going to jump in earlier to try to maximize any strong move away, then you're going to have to place your stop loss that much wider to allow for any reversals and pullbacks back into that congestion phase, which is often the case. It gets retested. If you're jumping on an existing trend, you can have your stop loss set that much closer, because the market is already moving and the trend is in play, and therefore you're not having to wait and be patient and set a stop loss which is that much wider. That's going to oscillate around there for a little while. Just see what's going on up there. Not a great deal. Okay, let me just head over to this chart. This is IBM. I wanted to pull this up because this has just got a it's got some great VPA lessons in here, but it really does highlight the power of VPA and what we're looking for. One of the things we're always looking for anomaly. That's what we want to see. We want to see anomaly. Of course, we want to see price agreement. If we've got a trend, if we're in a trend and we've got a position, then we want to see price agreement. We want to see that price is in agreement with volume, and therefore the trend, whatever it may be, is still established. But when you see those anomalies coming in, if you're not in the market, they certainly set the alarm bells ringing, and we've got quite a few here. If you scroll right over to the left of the chart here, we've got this lot of volume coming in. This was a gap up move, and what is so classic with gap up moves is they often get filled. Now, I don't know where the VPOC was at that point. It could well have been there, or it might have been at a different level. This is up at the 146, 148 area dollars per share price for IBM. But what I really wanted to show you was this volume anomaly here. We've had this huge amount of volume come in, and a tiny reaction on the price action. That is anomalous by any stretch of the imagination. And there's two things that really draw your attention to it. First of all, the fact that this massive volume came into the market and the market went virtually nowhere. It just oscillated around on the day. The market did ultimately roll over the following 2 days, but actually managed to rally. And it's a key aspect of VPAs that you can't expect anything to happen immediately. It doesn't, but it will happen in due course. And when you see a signal like that, again, it's a question of being patient. Now, the following 2 days, you might say, oh, well, I've lost, that opportunity to short the market because I saw this signal come in. Sure. But ultimately, it does roll over. And that was the point at which really the starting gun was fired on the wholesale clear out of the market makers in terms of selling into weakness. We've had this extended distribution phase of congestion, and then we get this massive effort to clear out what is left. The market sort of goes a little bit higher, not terribly strong. The volume down here is pretty weak. And then we get the rollover and into the price waterfall lower. This gap down is on high volume, as you see here. But what I really wanted to show you were two more examples here. This level here, this is again, it's another of those huge efforts to rally, and the market then sinks and collapses further. But this is the candle that really is the key, this one here. We've got two volume bars which are identical. On the first one, we had price spread of, what is it, maybe $5 or $6 on the day, from around about 120 down to 114.50, something like that. So it's $5 or $6 in here with a ton of volume. But then look at the following day. You've got nothing like that. It's not even $1, and you've got the same amount of volume. What is that telling you? It's telling you loud and clear, this is buying. The market makers are stepping in at that point. They've crashed the market. They've done a huge amount of selling in here. Remember, in this price waterfall, there's an awful lot of buying and selling going on in the process of the waterfall, which has to be cleared out. This is a clearing out day. They've acquired stock. They push it up. The price goes up. Everyone thinks the market's going to rally, crash it back down. Tons of volume coming in. The following day, crash the market down some more. Lots of volume underneath it. And then they step in to buy, and they're buying in this candle here. Tons of volume coming in. This is an absolute classic. What's interesting is that on this occasion, the market's actually rallied quite quickly. It's only taken a couple of days. Normally, you'd expect it to take a little bit longer than that, maybe get some more buying coming in. There was further buying in this region here. And what's interesting about this particular candle is something I mentioned this morning. When you get price action that reverts back into an area where you've seen extremely high volume, and that volume is then much lower, as it is here, what that's telling you, this candle and this volume bar here, is that within this price area, buying is now diminishing, and has diminished quite dramatically. In other words, the buying has been mopped up. The sellers have been taken out of the market pretty much. Didn't get any test on this occasion. We've just gone straight up into it. Market's moving quite strongly today. But that is an absolute key signal. If you saw that on any stock chart, indeed any price chart you care to look at, once you see that sort of anomalous price behavior, then that's a signal that potentially you're starting to see strong stopping volume coming in, strong buying from the market makers, the insiders, the big operators, whatever it may be, and the opportunity for a potential reversal in due course. It's a great chart, and it's just a great signal on the IBM daily. And if you're trading that longer term as either an investor, certainly one that we would have had on the radar. That's not to say it's going to carry on for a long time, but certainly given that extreme of volume, which is the highest on the chart, you'd certainly expect it to carry on for a little bit more than a couple of days. Maybe you'll get some profit taking after 2 or 3 days of uptrend, but certainly you might expect that to develop in the longer term. And obviously what you're looking for now is you'd be looking at that on the weekly time frame. You'd be looking at what's going on there. You'd be watching the trend monitor over the next few days, see a transitional color coming in, and just see what's likely to develop thereafter. But I thought it was a great chart to look at. Just go back and see what's going on GE. Bless its little heart. There we go. There's absolutely nothing on that chart to suggest that there is any buying of any great consequence coming in for the time being. So where is G going to go? Well, it's probably going to go below sub 9. And when it gets down to $8, $7, $6, and $5, then everyone will be coming in and buying it because it's cheap and it's considered cheap. How long it remains cheap is the next question, because you might well be right, and sitting on a $5 stock that was $35 or $40 is great, but how long are you going to have to sit with that position before it recovers any meaningful value? And that's what it's all about. Stocks are cheap for a reason. Just see what's going on. Let's go back. We're still in sideways at the moment. That's on the 5-minute. Not going anywhere for the time being. Yeah. I'll just pass back to Anna for a moment. I'll leave this chart up because if it starts to develop, we might get a trend out of it, but we'll see.
Yes, I was just looking at some Bloomberg headlines, and it seems apparently nobody wants to be long going into the elections. As I said earlier, it's just a wait and see. I had gold up. Let's just bring up the GC. Have you got gold up there on the week? I was just looking on the weekly. I mean, it's still that's not. It's just very tight ranges, and is it any surprise? Is it any surprise? There is another factor as well to consider, and this especially obviously if you do any traded commodities or the oil, and that's yesterday was the day that the sanctions kicked in against Iran. Again, that's all sort of on the that's going to be some major newsworthy so I'd say it's going to be newsworthy, certainly coming into, and what I'm trying to say is everybody's waiting for the elections. Once the elections are over and everyone knows where this presidency stands, what happens in Congress, what happens in the Senate, then it'll all pivot and we'll get a clearer idea of what is likely to happen. And of course, we've got the FOMC on Thursday. The likelihood of an interest rate hike is almost negligible because they've penciled, it's December they've penciled in, David, the band for December, so we'll wait and see. So what I was going to say was, given that it's all very, very moribund at the moment, even on the Forex side, we've been watching the British pound, in particular cable, from some moves from this morning. Obviously, you have huge reactions every time there's news coming out about Brexit. And I think this morning there was even a sharp move higher on some thumbs up given by one of the negotiators. I think one of the UK negotiators. I think someone wrote, "Oh gosh, where markets are moving on hand signals." It kind of tells you really how how tricky it is at the moment. But hey, it'll pass, and markets will go back to their normal state and ranging, and there will be trading opportunities on another occasion. Is there anything else you want to say on that one? Does that kind of move you back? Is that okay? Fantastic. Okay. Yes, you see it. You can see, and of course, on the political side, that's the latest about the Italian government. Well, we all know about the Italian government, and there we go. So, I'd just like to leave it like that. I mentioned earlier that the indicators we use are from quantum trading. The best thing I can suggest is if you head over to quantumtrading.com and click on the on the navigation, which is actually for indicators for Ninja Trader, and go into the videos section, it'll have all the indicators that we've developed. There are the Forex ones there as well, but you can just move on from there. That's the accumulation and distribution. So if I just highlight that, you can see this is where all the resource is, and you will find more than one indicator on each, or more than one video on each of the indicators. It's and also for Ninja, and both they both work for Ninja 7 and Ninja 8. As I said, in this session, we kind of stay away from Forex. We really just want to have a look at VPA and how it applies to the indices, the stocks, and sometimes the commodities as well. So that's where it is. That's really the best place to go and find out a little bit more about the indicators, and all those videos are on YouTube. The set of tools that we use in these sessions is what we call the essentials. It's 749 as that package, but you can pay on the EPP. But you can just buy one or two. I mean, you know, the volume point of control, the volatility indicator, really anything that will make your trading life a lot easier. And I think that's all. We have got this room that we've started. It's called for VPA traders. I know some of you have been in there already. It is by invitation only. You just need to send me an email, anna@annacoolen.com, and I'll quite happily send you the link. And it's where David and I also go in and put our thoughts. And there are Forex traders there. There's people trading all sorts of other things. So, you know, it's there if you want to take part, or you want to put your own charts up. It's a really nice platform. In fact, I've got the platform here. You can see what it looks like. There we are. That's what the platform looks like. So it's a really sexy platform, very cool. And it looks like a proper trading platform. It's a chat room essentially, but it looks, you know, especially for traders. Anything else you want to say, David? Answering questions? No, that's it. What's that like?
How we screen for stocks.
Oh, do you want to go to that one as well? Or shall I show? Okay, I think David wants to about screening for stocks, and I've been, as I said last week, I've been looking at an app that someone has sent me where they use unusual volume that comes through, but generally I haven't really got a strong view on it at the moment. Finviz is the site. This is the free version of the site, and you can you can filter on the fundamentals and the technical and all sorts of other things. But essentially, what we've always done in the past, this is purely our way of doing it, is you look at the change here, and 2% is quite it's a big move. But it's not so big that it won't allow you to do some analysis on the chart, on the stock, and then you just put them on a watch list. So, you know, it gives you your first step in to see what is actually moving. Then you can go to the chart and see, well, where is that in terms of the price cycle? Is it a distribution? Is it still in a waterfall? Is it in congestion? Is it looking to come into accumulation? You know, and you can then, because it all depends what you want to do with the information on that chart. If something is in congestion, are you looking for stocks or an instrument that's in congestion because you like trading a breakaway? If you don't, then perhaps you look for the price cycle that is in, you know, you like to short, then are you looking for a top, some kind of distribution? And, you know, it really does depend on what you like to trade, what suits you as a personality-wise. Whenever we go through our, you know, what we've traded and what we've done, David, 99% to the short side, 1% to the long side. That's his bias. And, you know, he used to think, oh, as a trader, you know, you've got to be able to trade both. Of course, you can trade both sides of the market. But if you really like trading to the short side, things short, they move a lot faster. They move a heck of a lot faster. Markets move a heck of a lot faster going down than they do going up. Do you want to add to any of that, darling?
Just to add to that, really, to answer Jeff's question, that is what we would do. The way we do it is we've used several programs over the years. We've used ChartSmart, we've used a UK company, we've used several of them, and basically in pretty much the same way in terms of filtering out whatever it is the metrics. Are you interested in blue chips? Are you in mid stock? Whatever it may be, and then you apply your filters, whether it's volume, whether it's on volume of turnover, whatever it may be. But in addition to that, what we also do is, because we have always been looking for particular stocks and price action, believe it or not, when you're looking for a particular pattern of price action, you can do it really, really quickly. You can skim through 100, 200 stocks in a matter of minutes and actually instantly pick off the ones that you want to put on the watch list. If you're looking for example, stocks that are in a congestion phase, a long-term congestion phase, you're on the dailies or the weeklies, you can flick through and pull those up literally very, very quickly. So going through several thousand stocks, we used to do the whole lot in maybe an hour and a half, couple of hours in the evening, literally visually. But in addition to that, you can also filter out using all the technical information you want to put on your filter. So it's a combination process. Yes, some of it is filtered automatically for you, but in addition to that, we eyeball the charts. We literally go through them hundreds and hundreds an hour. But it's relatively straightforward, because what you're looking for, if you're looking for particular patterns, if you're looking for a bottom, for example, if you're looking for a saucer-shaped pattern of a bottom where you've had a stock that's fallen quite heavily over the period, over a longer term, it then bottoms out, it forms a saucer, and you're looking for that start of the rally higher, that start to move away. You can pick those out instantly, and they'll just jump off the page at you, because that's what you're looking for. So it's very much also pattern recognition, as well as using the filter systems that are so good on FinViz. Is great, it's free, but there's a paid version, but there are lots of other packages out there that will do the same job. So I hope that answers that one for you. Just passing back to Anna.
And just finally, the emails. If you want any more information on the quantum tools, that's either david@quantumtrading.com or helpdesk@quantumtrading.com. And of course, there is the site quantumtrading.com, where you have all the videos and the support pages. Right. Thank you so much for coming along. I'm really looking forward to finding out what's going to be happening in the States. As I said, absolutely crucial for all sorts of, not least for the US, for the Americans themselves, but also huge implications for the market. Let's see what happens, and we will catch you. Is it next week? We're back on Monday next week, probably. Probably next week. We'll be back on Monday, either in the afternoon or the evening. We'll just make that decision later on in the week. So I hope you've enjoyed what we've done. I hope you've learned something maybe you didn't know before. And whatever you're doing, have a great trading day, the rest of the trading week, and we'll catch you next time. Take care. Bye.